Welcome to the Life Self-Mastery Podcast, where we bring in entrepreneurs who have created online businesses and improved their lifestyles. Here's your host, Rohit Malhotra.
Hi everyone, I'm Rohit from lifestylemastery.com, and today we have Phil Nadel, who's the co-founder and managing director of Forefront Venture Partners, which is one of the largest and most active AngelList syndicates where investors can invest along with Phil on the same terms in promising high growth startups. Welcome to the show, Phil.
Thank you. Nice to be here.
Awesome. So, can talk about your journey, how what you've done, and how did you get your start into investing into startups?
Sure. So I've been a serial entrepreneur for my whole life, and early on I was fortunate enough to have a few very good exits, some profitable exits. And after I sold one of my companies, a few of my friends and family members started approaching me about investing in their companies and helping them with their companies, which I did. And so my angel investing really started many years ago when I started investing in companies that were started by friends and family members. And then it sort of spread from there to people I knew and companies I heard about. And eventually it became my full-time occupation, where I really just focused exclusively on early stage investing.
Awesome. So, you run one of the largest AngelList syndicates. So why did you choose AngelList, and why not create your own fund and run a VC fund?
I'm sorry. Are you asking why we are work through AngelList instead of having a fund?
That's right.
Oh, AngelList makes it so much easier for us than operating a fund by ourselves. AngelList takes care of a lot of the all the administrative tasks, the back end work. They do all the legal sort of administrative legal work in terms of forming entities and collecting the funds from investors, all that kind of stuff. They just make it so easy for us that if we had our own fund, we would have to do all that. And so it's really a pleasure working with them.
Okay, and how many deals have you syndicated till now since you've opened this?
We have syndicated 48 companies, and we've done more than one round for some of the companies. So probably a total of about maybe 63, 64 different rounds, but for 48 companies.
Okay, and what do you look for an entrepreneur when you decide to invest into them? Do you come in as an early stage or a later stage seed round?
We invest in seed rounds and Series A rounds, so pretty early on, but we only invest in post-revenue companies. So in terms of what we look for in entrepreneurs, that can be a long. I could spend a long time answering that, but basically we look for experience, industry experience. We look for integrity, transparency. We want to see that they're willing to learn, that they're coachable, that they have a real a strong conviction and a vision for growing the company, and that they're solving a real problem. Those are some of the things.
Okay, and you said that you look at companies post revenue. So what sort of traction do you look for when you invest into an entrepreneur? Do you think an entrepreneur who makes around $15,000-$20,000 in revenue per month should approach you guys, or it has to be more than that? How do you determine what sort of revenue numbers are okay for you?
We don't have any hard and fast rules about how much revenue, but I will say that it's I don't think we've invested in any companies that are generating less than about $20,000 a month U.S. in revenue. But what we look for beyond that in terms of traction is that there's some early indication of product market fit and some early indication that the company has identified some scalable marketing channels. So those are important things for us that we try to look for early on.
Okay, and how do you generally get the deal flow? I know that you've been a serial entrepreneur, and do you rely on your own relationships, or do you actively go out for demo days, or go to colleges and look for young entrepreneurs?
Most of our deal flow comes from referrals. Referrals from other venture capitalists and from other investors and funders. People in our syndicate members refer deals to us. But also, unlike a lot of venture capitalists, we encourage company founders to contact us directly, even without a referral. But they should make sure that they meet our criteria first. Don't contact us if you don't meet our investment criteria that's listed on our website. But we do encourage cold emails like that from founders.
Okay, and what I like about AngelList is you can start investing into backing the syndicates, and along with other investors invest into syndicates. But for investors who listen to this podcast, would you advise them to invest into AngelList syndicates, and what would be the pros and cons of AngelList platform? Because you're investing a very small amount, but you don't look at getting onto the board of a company, but are the returns decent for an investor who's looking at investing into these startup companies for a 5 to 7 year horizon?
I mean, I think, as the head of one of the largest AngelList syndicates, I'm a bit biased, but I think investing in startups through AngelList syndicates is an excellent way for angel investors to participate in this asset class. I mean, think about it. Syndicate leads like us, we source the deals for investors, we negotiate the terms for them, we do the due diligence, we do the legal work, we advise and mentor the companies, and much more. And we do that's much more than an individual investor could do on their own. And we do all of that, and investors get to invest alongside of us on the same terms. And then they don't have to pay any management fees. The only fee that they pay is if they make a profit on the deal, then they pay a portion of the profit to us. So I think it's a great deal because, you're, as an investor, an individual angel investor, you're exposed to a lot more deals than you could ever see on your own, and they're vetted deals, and the due diligence has been done, and the terms have been properly negotiated, and all of that, and you get to just ride along on the same terms. I think it's a great deal.
Okay, and for an investor who's looking into making around 5 to 10% of his net worth into startups, do you also recommend looking at cryptocurrencies and other risky investments,
we have avoided crypto for the time being. There are just too many scams out there and ill-conceived businesses. We may take a very careful look once things start to shake out a bit, but for now, we're avoiding that space. We are big believers in blockchain technology. We have no problem investing in companies with smart applications of blockchain, but we're not investing in crypto right now.
Okay, and are you industry agnostic, or do you avoid certain industries like hardware or marketplaces, etc.?
We are generally industry agnostic, but we do focus on companies, as I said, that are post-revenue, and we focus on companies that are capital efficient. So there are certain industries that are just not by their very nature capital efficient, like a lot of medical companies that do heavy research and development, or companies that are growing by building more brick and mortar stores. Those types of companies are not capital efficient, and we would likely avoid them. But other than those types of things, we are industry agnostic.
Okay, and so lately what has happened is that tech startups are waiting longer for IPOs. So what is your take on that? Should tech startups look for exits, or they should stay private, like Uber, and we just got Snapchat, which got an exit, which had an IPO in the recent years. So.
Well,
do you think it's a good way whereby startups are being private?
I think I feel strongly about this. I don't think that startup CEOs should even think about an IPO. IPOs are just too uncommon. They're too rare. If the company truly starts to scale at meteoric rates, like an Uber, like you mentioned, then you can start to think about an IPO. But generally speaking, I think CEOs should always think about potential exit opportunities via acquisition, and they should start forming relationships with potential acquirers early on if there's no competitive concern. But I don't think that they should even think about IPO. I just think that's it's so unusual for an IPO to happen that it's not really prudent to waste time thinking about it at the very early stages of a company. Does that make sense?
Yeah, absolutely. Also, I want to know, are there any interesting startups that you recently invested in, which you would like to tell to the listeners?
Oh, you know what? I think all of our portfolio companies are interesting companies. The last company we invested in about a month ago is called Data Assembly, and Data Assembly provides a terrific SaaS product to big brands and retailers that give them full transparency about real-time in-store pricing data. So up until now, brands had no way of knowing what the retailers were charging for their products in the stores and on a store-by-store basis. But with Data Assembly, they can get that data in real time on their computer, and retailers can also get that data so they know what their competitors are charging for products in every store, in every across a whole chain. So it's a real game changer, and they're doing great so far. So that's the most recent company we invested in, and I'm very excited about that.
Was it a seed stage investing or Series A finance?
That was a seed stage.
Okay, and how many exits have you got till now since you formed this Forefront Venture Partners?
How many? Did you say how many exits have we had?
Yes.
Yeah, we've had 5 exits so far, but it's been early. It hasn't been very long. We've only been building the portfolio, started about 5 years ago. So we have 5 exits so far, and there are a few more that are probably getting ready in the next few months to exit.
Okay, and what is usually the the size of these investments when you look at syndicating for each of these investments?
The typical size that we invest in for the syndicate, the typical amount we invest, is usually between $300,000 and $500,000. That's our typical amount.
Okay. Oh, got it. And do you only focus on US startups, or do you also look at European startups, or have you thought about looking into Indian or Chinese companies which can get syndicated?
Currently, we invest in US, Canada, Israel, and some parts of Western Europe. And the reason we don't invest in other countries is that, again, the SEC regulations make it difficult. So AngelList tells us which countries we can invest in based on the guidance that they get from the SEC. And so certain countries, their laws are very different and make the type of disclosures required by the SEC very challenging. And so my understanding is that that's why certain countries are excluded. But those are the areas that we're currently investing in.
Got it. And for a beginner who wants to start investing into angel investing, do you recommend any books or any angel investor whom they should follow so that they could learn more about investing?
Well, they should follow me. I write a lot of articles, and I do podcasts like this one frequently. They can find me on medium.com. That's where I publish a lot of my articles. And there are lots of good books. I mean, I always recommend I recommend a book for startup CEOs, but what you're asking for is investors. There are a couple of good books that Brad Feld has written. Brad is a venture capitalist, very well-known venture capitalist and a well-known author. And Brad has written some good books about venture capital investing that I would recommend. And there are a few others. David Rose wrote a good book on angel investing. I don't know. I think it's just called Angel Investing. So there are a few good books out there.
Okay. So, let's do the top three. What's your favorite business book?
Well, the one, again, that I recommend to startup CEOs is called The Lean Startup, which I think is invaluable. I think that's a great book for CEOs.
Okay, and if you could go back in time when you started investing into startups, what is the one thing you would have focused on?
Well, our approach and our investment thesis really haven't changed much since we started out. We just try to invest in great founders solving real problems in smart ways. So I think I just would have focused on that starting out as we do now.
Awesome. And what's your favorite online tools, example, Gmail or Slack?
I would say the one that I use the most is probably LinkedIn. I think I end up using LinkedIn quite often, and so that's probably I guess you'd say that's my favorite.
Okay, and what is the best way people can reach out to you and invest into Forefront VC venture partners? I believe only accredited investors can invest into AngelList syndicates.
Accredited investors only, yeah, and they can go to angel.co. Angel.co, that's AngelList's website, and they can look up Forefront Venture Partners, or just go to our website, which is forefrontvp.com. They can read about us there and find out about the syndicate and read articles and read about our investment thesis at forefrontvp.com.
Okay, we'll put that in the show notes. Thank you, Phil, for coming onto the show and letting us know more about the syndicate. I really appreciate talking to you.
My pleasure. Thank you for having me.
Thanks for listening to the Life Self-Mastery Podcast, where we teach you how to start and grow your online business. For more information, visit Rohit's blog at www.lifeselfmastery.com.